Hey everybody, it's me again, Adam Chapnick with the Security Token Academy. I'm excited to be joined today by a very special guest. We have Alex Blum here from Atomic Capital. Thanks for joining us.
Yeah, it's great to be here. Thank you.
Sure. So tell us a little bit about what you're up to at Atomic Capital.
So, Atomic Capital, like a few other companies, is focused on helping people raise and issue tokens in a way that's compliant with SEC law, essentially. So that's everything from vetting people for AML, KYC, and accreditation to issuing a token that complies with certain lockup periods or whitelisting wallets, kind of the standard things that, in my estimation, they're all known kind of factors, and it's just making sure that it all kind of flows seamlessly for people to use.
So are you a technology company that has built your own token, or are you an advisory that helps people build their tokens?
Neither of those things.
Oh, neither. Great.
We're a technology company, but we don't have our own token. I don't
Okay.
think there's any reason to, if you're just passing people through a process that's a bunch of different steps, there's no need for us to have a specific token. And in fact, I think it creates extra friction if you're requiring people to have that extra token.
Mm-hmm.
And it's like a convenient fundraising tool, but isn't actually needed for what we're doing.
So do you have a protocol, or I'm thinking of like Polymath, how they have their thing?
Right.
Is that totally different?
So, you can call it a protocol. I think
Okay.
it's, I think it's a nice branding thing that, honestly, but I think a lot of them, it's a pretty straightforward set of like things that these different companies are calling the R token or ST20, things like that. But we're doing the same things as those protocols and running people through a process that complies with all those requirements. But to date, we haven't branded it and sold it as a new protocol.
Got it. Awesome. So you have an exciting landmark day coming up shortly. What's happening next week?
So this coming Monday, June 18th, we're just launching with our first client, which is a company called BuyProxy. It's a group that used to lead a company called 10x.com, which was in the commercial real estate software space, the largest prop tech exit in history at like $1.6 billion. And now they're going back into a similar market, but not exactly the same, using some blockchain integrations and selling equity as a security token on our platform.
How great. So we're here with the Security Token Academy at the Security Token Summit. What is it about the security tokens that got you involved? You've been advising for a really long time for this space. Why security tokens now?
To be very honest, it kind of emerged from an organic need. I had this company BuyProxy and a few other clients that were in the need of issuing a security token, and were serious professionals that aren't have nothing at stake if their reputation or something goes wrong. And talked to a few other competitors out there and looked at their fees, and I said I could make this for a lower cost than they're charging you to use it once. We were a little bit uncertain about some of the legal gray areas as well as around some of the business models and how they're structured. So basically said we could do it the same thing and make sure you don't break the law or that you have to give the money back and at a lower cost, and you could own part of a company.
What do you think about the promise of security tokens versus what happened in 2017 with the utility token, ICOs? What are your thoughts on that whole shift?
I guess, I think all this stuff is a software, we can try to put into these tight bundles, but you wouldn't be like, is that a SaaS service, a utility SaaS or a security SaaS? In reality, I think you're on a spectrum from completely utility, maybe something like Bitcoin or maybe Ethereum, to the other end where you're just selling like a pure equity as a token. But I think there's a lot of interesting kind of gray space in the middle where the SEC has these certain kind of siloed baskets of you're this or this or this, and I think in reality software can make something that's a quasi blend of all those things. And I think to date, I understand it was great to be able to sell something that you didn't really have to sell anything related to revenue in the future or even ownership of a company, and could raise a bunch of money. And I think especially for monetizing the value of a protocol as almost as an idea, I can understand that in a certain sense, but I think for the vast majority of people and the vast majority of cases, it doesn't really compute or make sense as a business model. So I think you saw some successful use cases. People rushed in behind and said, oh, I would like to sell nothing for something. And now, I think there's a higher level of stringency and kind of hurdles to overcome to sell it as a security token. However, I think it's a good thing if you're talking about making this a mainstream kind of industry. The one thing I think about is there's certain things that are trying to serve a mass market, like a healthcare protocol, but that are going to end up on secondary exchanges and probably be treated as a security, but they need to reach people that aren't accredited investors. And so I think that tension hasn't really been resolved to date.
Right, exactly. I totally agree. We started seeing companies that are launching two tokens at once, one to raise and one to use,
Yep.
for lack of a better. I mean, do you think that might be the future, or is that just a clunky, sad kind of outcome of this gray area you're talking about?
Well, so I think it was just the other day the SEC pretty much said everything's going to end up a security, it looks like. And so, I mean, I think it's a convenient tool, or maybe right now you raise with the security one and you worry about the other thing in the future, or I've seen companies issuing one out of the US and one out of somewhere else. But I think,
interesting.
yeah, I have a client actually doing that. And so I think, I mean, I don't know. It's also gray and uncertain that, like, I mean, if you're a US company or live in the US and you're selling something out of the Cayman Islands and it's still being traded like a stock, I think you're not in the clear, you know.
Right. Well, right.
So I think in the long term, maybe the SEC doesn't believe it or not quite today, but there has to be some change to the structure in which we regulate these tools, because they don't fit into neat buckets in the way that our current regulatory environment is structured.
Right. So what do you think is the most promising thing about the token structure that maybe that what you're talking about is hampering? You know, because I mean, I can list, well, I shouldn't say I can, but I often think I can list lots of things. Like, it's sad that that's not happening because everyone's scared of it being a security.
Right.
Do you encounter things that you think, like, gee, it would be nice if they wouldn't get off the backs of these because they're not going to happen?
Right. Well, again, I think it's, you know, I could talk to this company the other day that was trying to build a protocol related to better healthcare data and transparency and sharing across different healthcare providers and people in that ecosystem. But, you know, they're a US-based company and they're trying to use a utility token, but it seems like a pretty high-risk kind of approach in the current environment. And so I think, again, things like that where it's like really trying to serve a mass population and you want these tools or these tokens in the hands of people that aren't just the wealthy and accredited.
Right.
I think that's really the category I see as not having a clear pathway at this point. Or, you know, those people all just go to different countries and kind of just avoid dealing with the US.
Yeah, that's also, I think, there's a risk there for just the U.S. economy in a way that we're inviting people to leave. But we'll see. I mean, I hope you're right, that the regulators catch up and make it a little more gray.
Yeah, and maybe it's, you know, I think also, being an entrepreneur and innovator, you always want to be on like the front edge, but there's something smart about Fortune 500 companies and, you know, big institutions and even governments waiting to see what happens and then maybe stepping in after that. And maybe that's a more mature wisdom or slower moving wisdom that I don't fully appreciate.
Right. Well, that's very glass half full of you. I appreciate that. What about the fractionalization, the sort of tokenization of existing assets? What is there? The thing that I love talking about is, you know, all the things that people trade and they have value, and, you know, for like baseball cards and stuff like, you know, like, is that a security now? You know, or like I always love working in the Pokemon cards, but like, how's that going to look? All the things that people have but have never been liquid at all versus things that are kind of liquid but only at like a baseball card convention, you know, like, and you know, where's that going to go?
Well, so one, I think like if there's two houses and one is fractionalized and liquid and the other one isn't, obviously that's actually, I think, innately a more valuable product than the one that isn't. It's the same with, you know, private securities or private shares of companies. I don't know how, in the long run, somehow that's going to be figured out, and I don't know how you can compete with the normal one if there's the same thing or better being offered with these additional features plus everything that the other one can offer. On the liquidity side, though, I think it's, if you're selling something that worth $10 million, like how liquid is that really? Like there's not like a giant global market moving around $10 million. And so, you know, one thing I think about is maybe they'll start bundling together kind of packages of things with similar risk profiles or customized risk profiles. Like I want something that has this kind of return or this kind of you know, risk profile. And instead of having like, oh, I'm trading part of this house, I'm buying some kind of personalized asset that fits the things I'm looking for. Because, I mean, no matter what, if you're selling $5 million of something, I mean, how much is that going to really be traded, or how much of a solution of liquidity really is there? Right.
Yeah, it's interesting. What do you think about in terms of people, like you mentioned, if there's two houses and one's, you know, just $2 million and the other one is you could have $1,000 worth of $2 million, right? What do you think that liquidity premium will do to I guess, I can call markets, but like different asset classes?
Well, I think, you know, it's kind of like if there's like a guy around the street from where I live and they sell like box of cigarettes or individual ones. And
you can, that's a great example,
you know what I mean?
Actually.
And so like selling things retail in smaller chunks to more people, you can sell them for more. I mean, that's the way businesses work, right? So I think there's just one premium on the way in who you're selling it to. It's like wholesale versus a retail sale. Beyond that, I think premium of liquidity. I mean, it's gonna, I think, vary market to market.
Yeah.
There's also like, it's not like things are liquid or illiquid. Like a
Right.
VC firm, for example, is like kind of, sort of a little bit liquid maybe at some point, but you can make them much more liquid. And then other things are already pretty liquid. Like, I don't think tokenizing like Apple stock today is going to really change like the liquidity or the premium around Apple stock. And so there's probably a range or variance around how much of that is valuable. But I think, I think a lot of people, one of the clients I have and a lot of what people talk about around real estate in particular, seems to be a prime spot where you can add a lot more liquidity and significantly increase the value of properties.
Yeah, it's exciting. So looking ahead with what you're working on, where do you expect, or what are you most excited about for the coming, say, 12 months?
Well, so I think if you're like the one putting together people that are investing or institutions that are investing and the companies looking for money, or the assets, maybe not companies necessarily, that you're kind of at the nexus of a lot of different players in this market. And so you're building up a giant kind of database or constituency of people that are looking for these services and the companies that are in need of that kind of fundraising model. And so I think when you're at the center of that, there's a lot of additional services and things you can do on top of that. So I think in the long term, it's going to be something like financial advisors for cryptocurrencies. But at that point, I don't think we'll call them like cryptocurrencies, like this crazy class. I think it'll just be financial advisors for the way we trade and use securities and other kinds of assets. I think investment banking services around, there's the technology part of it, but then also building up, actually going out and pursuing people that would invest in these things at reasonable financing rates is interesting. And then I think, to me, my biggest interest is how do we make all this tech and all this money work in a way that's better for society and not just like a few people. I lived in the Peace Corps with people that literally had $0 or very, very little, and think about how do you structure a new kind of wave of capital markets and such that it's not idealistic or crazy or there's no profit incentive, but in a way that creates maybe more stable or sustainable outcomes for everybody.
And that's something you guys are going to be putting some energy into?
Totally. So I think, to me, a lot of this tech from what we're doing and a few other companies that are similar, it's going to all end up pretty much as a commodity and the same thing. It's pretty clear to me what needs to be built. And so to me, it's more about capturing market share and getting some kind of verticals that you own and that you are focused on. And so one of the ones we're very focused on is around social impact bonds. I'm not sure if you're familiar, but structuring things that benefit society and have some kind of return so that they're sustainable at the same time. So especially with kind of my background of the things I've done, I know a lot of people in that space, and there's kind of a lot of promise and thinking around how that could work, but at the same time, it's not a mass market financial instrument at this point. But I think the flexibility around, again, how you can use software to design how value is exchanged allows for a lot more flexibility, and it makes it a lot easier to build those things more quickly in a way that the cost of building it doesn't outweigh the return.
Amazing. Social impact bonds. I love it. So, okay, well, Alex, thanks so much for sharing with us all that you're up to, and please come back in the year and we'll check out if what you're doing is what you said you'd be doing.
I can almost guarantee it's not.
It's fine. Yeah, no, it's good. We'll keep tabs on you. Thanks for joining us.
Thanks, man.
All right.